There's 200 plus billion, touching almost 300 billion, I believe, in stablecoins worldwide. All that money that went into the system, the yield goes to the issuers, not to the people who put the money in the system. That sports team's going to become the bank, and they're just going to plug in some utilities, and they're going to offer a whole suite of services to their fans. That's what I believe the future is going towards. And when you ask, am I building for transparency and fairness in the community? Yes. We have the ability to pay anyone in the world within like 3 seconds. Why do you still wait 3 days just to pay people in your own country, 7 days internationally, and that's only for a select amount?
Welcome to Onchain Capital, your front row seat to the future of finance. From Web3 and AI innovation and digital asset policy to the power shift between East and West. Today, we're unpacking it all with Reeve Collins, co-founder of WeFi and STBL, and the original co-founder of Tether. Reeve, thank you so much for coming on the show.
Great. Thank you for having me.
So Reeve, let me start with Tether, right? So you co-created Tether, which now moves volume in some days even larger than Visa and Mastercard. I mean, when you started building it way back when, right? Now it's the biggest stablecoin and by far the most used asset on chain. When you started building it, I mean, did you have any idea that it will become what it is today?
I mean, look, when you start any company, you hope for great things. But yes,
Right.
I would say it exceeded a lot of expectations because, you know, this is a decade plus ago. And for it to actually truly materially change how the world does business and how people transact, it's really amazing to see.
So when you look at what it has become, was there anything, I mean, obviously that was, as you mentioned, it was a decade ago. Things have really moved a lot since then, right? The market has changed, the policy landscape have changed, and also the number of players that are in the space have changed. I mean, if you were to look back, would you have done anything differently in terms of how you got started and where it has been?
But look, you know, hindsight's always 2020, but we really started this in 2013, so 13 years ago. And
Yes.
there was about 5 cryptocurrencies: Bitcoin, Litecoin, Namecoin, Peercoin, Dogecoin. I think that was like the extent of the cryptocurrency world back then when we started, prior to
Right.
Ethereum. But really, the concept was simple. It's, let's create a dollar that works on the internet, right? Everyone says, oh, we put the dollar on the blockchain, but what does that really mean? Prior to that, we had financial systems that moved money. Then the advent of the internet connected the whole world to the free movement of information. And that was huge. So now everyone's educated, but they didn't have a way to transact or to plug into the business side. That never caught up. And now all of a sudden, if you could put money on the internet, then look what could happen, right? You could connect the entire world to access to dollars and access to financial services. And so that was the concept. We can now move money globally, instantly, and for free. So yes, we thought it could be huge because it's just such a huge leap from what they had then, even to what we have today, to what the blockchain can offer. It's just so incredible. It's also nuts to see it's taken this long, 10 plus years, for the rest of the world to really pay attention, for the institutions, governments, and regulators to lean in. But we're finally getting there.
But do you, I want to double click on one thing, right? When you talk about the money that's moving on the internet, and you know, those of us that have spent enough time in Web3, we've always thought about this notion of, you know, self-hosted assets, you know, money that's in our own pockets, in this case, in a wallet that we control. But if you really look across now, most of these assets, especially the largest stablecoin like USDT, USDCs, and whatnot, they're really highly managed by centralized entities, right? And it's looking more and more like banks. What do you think about that? I mean, going back 13 years ago, was that what you thought it would become, or you were thinking actually it was going to go the other direction?
Everyone was hoping it would go the other direction, right? Think about the ethos of Bitcoin. What was the point? It was to finally have an alternative to your government's currency, to finally have an alternative to your nation state's financial infrastructure. And that's what Bitcoin and the blockchain offered. And so in the beginning, there's a lot of anarchists and a lot of purists and a
Hmm.
lot of just libertarians that were anti-government and saying we now finally have an alternative system. And it took a long time to grow, but as things scale, the governments and the regulators really try to slow it down and regulate it out of existence. They tried to kill Bitcoin because it's a threat. And
Right.
over time, they realized if you can't beat them, join them. And it's just taken a long time. When you look at the internet, it grew unfettered in the late 90s because
Mm.
there was no regulation. They didn't understand the what was going to take place, and they're like the governments are like, fine, you can post some things online. Who cares, right? They didn't
Right.
realize the
Send a
power,
message left and right.
yeah,
Yeah.
that it would have. But the moment it's okay, instead of the free movement of information, it's the free movement of money. The governments
Mm.
really care, and so they really squashed it. And so in the beginning, yes, the vision was to really create this alternative system outside of governments to create your own currency. But now you'll notice what this system's being used for. It's used for traditional currencies, but in an upgraded manner. And so, yes, the power is being centralized, and governments are leaning in because it's a true upgrade to the current financial ecosystem, the financial infrastructure. But to your point of where Tether and Circle and these big companies are centralized, that provides ease of use and trust, transparency, and speed sometimes. Because you can still do all those things completely decentralized. But you have to be a user that really wants to maintain 100% control and not trust anyone. And while you would think more people would be like that, it's much more inconvenient. It requires a lot of sophistication and it's difficult, it's complex. So it's a whole lot easier to trust a centralized entity. And so the masses go in and trust these entities that are more centralized. And that's why those are the things that are scaling.
So when you look at the notion of really, now managing not only the ledger and the assets and the reserve and everything else, the notion of transparency is super important, right? And I think a lot of over the last few years, we've seen issues that have arisen and sometimes giving the entire industry a bad name when transparency is not really in place and erode the trust of those that are getting into the space or really starting to really look at it. I am assuming that that was always part of the ethos of what many of the projects that you have co-founded, including now with WeFi and Stable, in terms of what that is really meant to do. I mean, maybe you can double click a little bit on that on going from your now creating the largest stablecoin out there, and then also all of these other projects that you've done, this financial rails that you're creating, help us through that thought process. And are you trying to piece all the pieces together, or are you looking at owning the whole thing?
Well, if you look back and think about what Tether really did, it proved that
Hmm.
that dollars could be programmable.
Right.
So now dollars are digitized, they're on blockchains, they're globally accessible, they're programmable. And what can you do with programmable money? Well, a whole lot more than what you could do with traditional money, right? Anything you put your
Hmm.
mind to it. But it's taken a long time for people to understand what programmable money is and then how to use it. And so this is the evolution that we're going to because you bring up trust. So now that we have blockchain, you can have complete transparency. But now that you have programmable money, you can also divvy up the yield. You can also share the revenue with the different constituents, with the different participants of the networks. So
Hmm.
in the beginning, we had to prove the use case. We had to shift the global uh, way that business is done. So now people understand wallets. They're comfortable with stable coins. The regulations are catching up. So what's next? It's the evolution of stable coins, which is stablecoin 2.0. And that's what STBL, my new company
Hmm.
is. STBL has brought out stablecoin 2.0, which essentially is mainly two things. It is complete transparency because another big
Hmm.
narrative today is all assets are being tokenized. When you
Right.
look at stable coins, the backing is traditionally treasuries, money market funds. That's the backing.
Yes.
And so you would
Hmm.
give Tether $1, they would buy a treasury. They would put the yield from that in their pocket and they would use the principal to back that token that worked on chain. That's a stable coin. But
Hmm.
now treasuries are actually tokenized. So if the asset, if the collateral is tokenized, it can be on chain. So that completely provides 100% transparency of all times of the reserves. So now all your reserves are on chain. So now there's complete transparency. But more importantly, now that money's programmable, the yield from that on-chain treasury is stripped, and it comes into its own token, and actually an
Hmm.
NFT. So the NFT is the tokenized income stream from that treasury. So that's one token. And then the principal becomes USST, our universal stablecoin. So now you have this programmable money, which the yield is split into this token, which you can divvy up to the person who put the money into the system or share it with users of the system. And then you have the principal that works similar to USDT and USDC. It's a universal stablecoin. So what has happened is this programmability opens up the possibilities for us to finally deliver on the promises of Web3, which is the people who put the money in the community should be the ones that receive the value. There's 200 plus billion, touching almost 300 billion, I believe, in stable coins worldwide. All that money that went into the
Yes.
system, the yield goes to the issuers, not to the people who put the money
Hmm.
in the system. And so that's what
Mm.
stablecoin 2.0 delivers. It's the new infrastructure for stablecoins. And in the beginning, when you look at it, people don't really get it and it takes a little while. But once it catches on, it becomes inevitable. And again, that's why I call it stablecoin 2.0, because I believe it's the inevitable evolution of where stablecoins are going, where all the collateral's on chain and the yield is programmably split amongst the people who put the money into the system.
So, Reeve, it sounds like while the majority, probably 95 plus percent of stablecoins out there are still operating in the 1.0 way, you are really advocating for 2.0 because of the fairness of the people that are actually acquiring these stablecoins in terms of the rewards and the incentives of actually holding them. Like you are actually advocating for us to really change that game.
Absolutely. And again, it's to me, it's the inevitable progression of things. When you
Mm,
look at where we're going, like what I see the future to be, this arc, and what I'm focused on is building the financial stack of the future. And that stack is that there's banking as a service and money as a service. And when that right now that
right.
we have blockchain that
Mm,
has made financial services globally instant and free, right? High quality financial services outside of regulators, outside of banks. Financial services that do not require extreme amounts of corporate overhead and then government oversight, because
mm,
that's what causes the delays. That's what makes it slow and expensive. But we have a solution to that called blockchain. So now it's
mm-hmm,
globally instantly and free, right? And now you
mm-hmm,
can build protocols and services on top of it that are all software based. And so the cost and the expense to deliver these services to the world is extremely compressed. That's the banking layer. And that's what I'm doing with WeFi. WeFi is
mm,
really leaning into providing on-chain financial infrastructure for the masses in a way that the fees that are usually extracted are getting put back into the community, right? Rewarding the users. So I'm trying to build this stack where I provide the financial infrastructure for the banking, and just as importantly, and that becomes banking as a service. And then STBL provides money as a service. So now it's the
mm,
programmable money. And then I have two other companies, Dual, which is the evolution of Block V, where we really brought to market and invented the NFT, highly programmable
mm-hmm,
digital goods, back in we started that in 2016, before the word NFT was. Um, and smart media, which is tokenizing loyalty, because it's all part of this stack. When you have money as a service and banking as a service, and so now you can provide regulated oversight of banking services, including white labeled or custom money, then
mm,
what's the only thing that matters at this point in time? It's distribution.
mm,
Nobody cares if you have Chase Bank or Wells Fargo or Bank of America. They just they want to do financial services. They're only going to Wells Fargo because that's the bank that's providing the services. But when it becomes a utility, when lots of people provide banking as a service and money as a service, it's the communities that matter. It's loyalty. And so what are the big communities of today? The biggest are fans of sports teams, fans of
Mm-hmm.
artists, gaming
Right.
communities, massive loyalty networks that are already in place, or huge like podcasters. So they have all these people have millions or tens of millions or hundreds of millions of people. When you look at a sports team with 500 million fans, I believe that there'll be a financial stack that someone that has the distribution, like these large communities, can just plug it in. Because in the past, the hurdle was regulatory and compliance and all that stuff. That's been compressed. It's going to be offered in a box, and now the distribution is going to be king. And so these large sports teams in the past, they're like, oh, I'll issue a co-branded credit card and get a rev
Mm.
share from the bank. That's not going to happen anymore. That sports team is going to become the bank, and they're just going to plug in some utilities, and they're going to offer a whole suite of services to their fans. That's what I believe the future is going towards. And when you ask, am I building for transparency and fairness in the community? Yes, because I believe those are the utilities that these large communities are going to plug in and offer to their fans and customers.
So Reed, okay, so what you just explained, and thank you for that. That was phenomenal, right? And but it sounds like you are building the stack. You want to own
Yeah.
the stack. And so then my question is, you're building these new stacks that can be independently working with each other, but can also be pieced together to offer the full end-to-end service. Now, that sounds to me you are really looking to build this new stack to disrupt the traditional players, right? But I if I was doing some research on some of the new projects that you've been working on. In fact, your project WeFi, I actually wrote one of the articles talking about the projects about a year ago because I found it to be truly amazing in terms of what it was doing and what it is doing. Now, if I look at that though, you are still inevitably forced to work with the traditional player. In the WeFi case, you are working with Visa, right, to leverage the network that it has built. So help me understand, like, how do you distinguish between building the stack and then charging at it to build the whole thing, or intersecting with something that's already there and potentially having it bleed back into, the notion of really disruption? What do you think about that?
Well, what WeFi is really building is on-chain infrastructure.
Mm,
So yes, we're using Visa for distribution, but Visa is using us for on-chain infrastructure. And what WeFi is really bringing to the table is the we chain, which is going to confirm the transactions, and then the banking layer above it. So it's this banking as a service. We want to
mm,
go into countries and partner with regulated banks and regulated entities that want to offer financial services. For instance, a soccer team, right? And
mm,
in that instance, we can probably offer the regulatory coverage in the future. But right now, in the beginning, we want to offer the software and the technology where there's a local bank that wants to offer access to DeFi, access to
mm.
RWAs and investing on chain and digital wallets, but they don't have the ability to. So we offer them a plug and play solution. And so when you say, oh, well, we're using the traditional infrastructure, they're using us. Our goal is to
Mm.
upgrade the traditional banks' product offering to their consumers with on-chain suite of services and products.
Okay, so super clear on that. I understand the distinction between the full disruption versus a co-opetition in a sense, in terms of the collaboration model. You just touched on something that I found really amazing, right? So you talk about a soccer team, right? Or in the world of World Cup is coming up. In the world of football, right? These clubs are massive, and you mentioned they have this massive fan base. Now, you are not talking about turning a soccer club into a bank, are you?
Look, who knows? I believe in the future, and I'm not talking in 12 months, 24, but probably 24 plus months.
Yes.
What's going to happen, we all know, is AI is inevitable.
Yes.
Agents are going to take over the world. What happens
Mm-hmm.
when an agent takes over the world? What happens when your whole life is run by an agent, but most importantly, your financial life is run by an agent? You are going to
Mm.
speak into your wallet and say, I need to do these 5 things. I want to send this person money and I want to pay these 5 bills. The agent is going to do whatever's the fastest and cheapest and most rewarding for you. And when fast and cheap is a race to the bottom because everything's almost going to be instant and everything's almost going to be
Right.
free. It goes
Yep.
to who's the most rewarding. And rewards is a spectrum. It is, oh,
Mm.
I get money back. I get 5 cents, I get $1. Or I get loyalty points that I leverage into these goods and services that are because I have these loyalty points. Or I just have affinity for Manchester United and I bleed that and I want everything to support that. Or I have an affinity for a charity. I want my money to go to starving children. And so I want my financial services, the rewards there to be allocated to this charity, right? That's where we're going because the AI is going to do it. You don't need Wells Fargo or Chase Bank. You need to tell your AI what you have the most affinity for. I want to earn the most money or I want to earn the most loyalty rewards. And so tokenization of loyalty, which enables loyalty programs to be plugged into AI in the future is super important. And then the ability to program the yield, program the rewards to be distributed to wherever you go is super important because I believe in the future that is going to really be the key driver is the distribution, and what's going to attract those customers so they can have the distribution is loyalty and rewards. What's the most rewarding for the consumer? And so it's not about brand, it's about the best technology. And the only way to deliver on all those things, because a lot of this we're talking about microtransactions, fractions of
Right.
pennies, right? That just add up.
Mm.
So it has to be blockchain, it has to be stable coins, and it has to be AI enabled.
Okay, so you just painted a future that I can visualize, and I think we're already at the first steps towards that. Here's the big question for you, Reeve. You know, anything, and you touched on this earlier, anything that touches on monetary value, inevitably, there's going to be a very big party that's going to get involved. And that's the regulatory bodies, right? And they're going to look at this and they're going to be like, wait, hold on. I've already got the rules in place. I got the players. They're licensed. They're certified. They leave them doing what they do. And if you look at across the world, obviously, starting in the U.S., the regulatory environment is, I would say, becoming more and more clear, right? Especially compared to the last administration. But at the same time, that just means more heavy-handed control, more governance, more supervision. And, I think one of the reasons why the Clarity Act in the US is still kind of getting stuck, I think it's moving now, but it's been stuck because you've got like really two massive forces on both sides, really fighting for more technology driven innovation while being responsible, in terms of to the customers. And then the other side is really trying to protect their turf. So how do you balance the two? Because the vision that you have painted is phenomenal, but there's going to be someone pulling your back, right? So how do you balance that?
100%. Regulation and governments always slow everything down. That's why it took a decade for the blockchain to take off, was because of regulation. And regulation is just starting to say it's okay. And so now the large institutions are starting to lean in and saying, great, let's upgrade our infrastructure because we're not going to go to jail for even talking about it, which they would have a few
Mm.
years ago, you know. Um, and so your question is, this is also why I said this is, 3 years out. One, AI
Mm.
really needs to get there, but most importantly, it's going to take a while for regulation to catch up because what's going to happen is it's going to be genius as a service, regulation as a service. So, like WeFi and STBL and a lot of other people, where they're going to end up is they're going to provide the suite of software and package the regulations in a way that their partners can operate under their umbrella. So I believe that's where it's going. It's not there yet. It's going to take a while. It's going to take a while for regulations to catch up because this first round, like you mentioned, Clarity Act, it's been held up for so long for so many reasons, and a lot of
Mm.
them have nothing to do with the merits of the technology or even protecting the incumbents. Some of the reasons are just political infighting between Democrats and Republicans because Donald Trump is
Right.
so pro crypto, and they're like, we don't like you and therefore we don't care if crypto is the best thing in the world, we're going to stop it, right? Or we don't, or we think the way you're using crypto is not proper and so we're going to stop that. Like, there's just so much political hair on it around the world. And so as a technologist and as a builder, all you can do is build the technology, provide the best service, and then let the technology fight for itself over time. I use this analogy a lot. look at Uber, right? When Uber came out, it was illegal. But the thing is,
Hmm.
it provided such an amazing service, and the consumers demanded it. You couldn't stop it. Uber had to fight cases pretty much in every state and every country in the world
Right.
because the incumbents
Right.
tried to shut them down. They're like, you can't do this. But and they couldn't, right? They actually, most of the times, the Uber was operating outside of the law or the regulation wasn't ready yet. And then the regulation caught up because the consumers demanded it. This is the same thing. It's just a bigger fight because it's money and transactions. But when the software gets even more robust and mature and bulletproof, when AI steps up a little bit, the consumers truly are going to demand it. Because look at the Clarity Act, one of the biggest issues. It's sharing of the yield. They're like, oh no,
Exactly to
you,
your point
you,
earlier, right?
yeah,
Exactly your
you
point.
can't, you can't give your consumers a better product. We're not going to allow you to share the yield with your consumers because there might be deposit risk. You might pull the money out of
Hmm.
banks, and then banks won't be able to make enough money to provide their services anymore. It's like, well, that so that means it's a crappy business model, right? It's an extractive business model. Now there's software
Mm.
that replaces it all. It's time for the regulations to catch up, but it's a slow process.
So I
And the
really
last
love
point,
the
sorry to interrupt,
yes,
but the point
no
that I
problem.
really like to drive home on that really makes it understandable is we have the ability to pay anyone in the world within like 3 seconds. Why do you still
Hmm.
wait 3 days just to pay people in your own country, 7 days internationally, and that's only for a select amount of people around the world? You can't even, if you wanted to pay a vendor in Mongolia, you couldn't do it, right? But now you can. So we do have all the capabilities, but it's regulation that's stopping it.
It's not just the 3 days or the 7 days for international. It's the fact that once you send it, it goes into a black box. You don't even know where it is. Sometimes it gets held up and then it bounces back and you have no idea why, right? So I think that's I talked to a lot of fintech companies that are in the cross-border space, right? Cross-border payments and whatnot. And one of the biggest things that clients are saying is not because it's cheaper or just purely faster, is because they actually know where the assets are. They know every hop along the way, right? So they have
Yeah.
the comforts to actually understand, hey, my money is not getting lost into the ether, but it's actually going towards where I tell it to go. So that's a really good point. And I was gonna say, the point about your point about Uber, in some sense, Airbnb, these transformative businesses, they just did it because they're offering a better service, right? And once it gets to a certain point, then everything have to catch up, whether it's the traditional players or in some cases policymakers and regulators, and they have to catch up. So let's hope that the Clarity Act is going to move forward. I think there's a lot of goodness that are packed into it. And I will tell you from this side of the world, a lot of regulators that I talk to are all eyes on first the Genius Act, which got passed last year. So great, great job. And then now the Clarity Act, because it's going to be the model for many to either emulate after or at least figure out a way to work together on that framework.
Yeah.
Yeah.
And it's a huge step. And what it's really going to do is unlock the trillions of dollars that are stuck in the traditional financial systems and allow that to flow on chain. And stablecoins are the bridge. That's all it
Mm,
is. Stablecoin is just a bridge to say, we have a system that can move this money faster, but you need a bridge. You need to format it as a stablecoin so it works here. But that's just
yeah.
step one because in a very short period of time, once it's formatted to work over here, it's going to go back to being a dollar, a euro, or yen. It's just going to move globally instant and free on a blockchain. So the idea of a stable coin as a concept, it's just going to be money, and then that money is going to be able to do more things because it's programmable.
Okay, so I have two more questions for you, Reeve. One is, okay, so we spent a lot of time talking about digital money. Let's not call it digital currency because sometimes people immediately think Bitcoin and whatnot. Let's talk about digital money, right? It's living on the blockchain and moves freely, but it still have guardrails and still have the rules that it needs to follow. So let's use that as the framework. Stablecoin is not the only digital money that exists today. There are now lots of talks about tokenized deposits that are sitting on banks' balance sheets. There's also the notion of central bank digital currency. And maybe at one point, and I'll ask you the question, is that if you think about a CBDC like the Chinese yuan, the ECNY, which earlier this year actually announced that they're going to be doing interest payments on the CBDC itself. What do you think about that? Like, are these competing forces? Is it because the central bank is trying to protect the turf? Or do they actually have different use cases? Like, what do you think?
Well, from a CBDC case, it just depends on which hat you're wearing. If you're a government,
Mm.
a CBDC is the greatest thing ever, right? You have complete control, 100% transparency and control of the money. You know where it's going. You can stop it, freeze it, rewind it, do whatever you want with it. It's highly programmable. As a
Mm.
consumer or as a citizen of that country where your government has complete control of your cash, you should probably be pretty concerned, right? It's not a good thing. It's an invasion of
Right.
privacy and of your rights, and they can completely control you. So that's why it's such a big issue. So from a consumer's point, it's terrible. However, it does provide tons of convenience. You're paid instantly. You don't have to worry about paying your taxes because it's taken out before you get your money. You know, like it does all
Good and
these
bad,
things.
right? Again, from
Yeah,
your perspective.
exactly. Yeah,
Yeah.
and so my perspective is just software. My perspective is it's a massive software upgrade, a massive infrastructure upgrade for a country to issue a CBDC, but it's a big downgrade for the consumer. There's other ways to go about it. Like the United States is basically almost on a state by state basis has both outlawed CBDCs, and then the government is saying they're not going to issue
Hmm.
them,
Right.
and therefore consumers have other options to use, different blockchain-based currencies that work for them that private companies roll out to market.
What about tokenized deposit? Is it the bank's way of fighting back and saying, look, I have a token too. I have something that looks like a dollar. Use mine.
No, it's the bank's way of keeping up. It's the bank's way
Mm.
of upgrading its infrastructure, saying my deposits now move globally instantly and for free. So people are looking at it the wrong way. The bank say, "Oh, I have a tokenized deposit." The bank should say, "I can now offer you globally instant free movement of your money." People don't care if it's a tokenized deposit, a stable coin, or whatever. They just care that their service is much better. And again, I used to use that analogy in the beginning when people didn't understand blockchain or Bitcoin or all these things. I'm like, you don't need to understand blockchain. All it means, you might still use Wells Fargo. It's just going to be your services are way faster and cheaper and better, right? Those companies are going to upgrade. And that is what a tokenized deposit is these 10 years later is you're finally seeing traditional banks upgrade their infrastructure by tokenizing deposits. But the consumer shouldn't care if it's tokenized or not. It just cares how quickly it moves.
So it becomes the rail, it becomes infrastructure rather than an asset itself.
Yes, absolutely. Because your tokenized deposit is just your deposit in a different format. It's not a different asset. It just has
Yeah,
better features and
that's right.
functionalities. Yeah.
Right, specifically to that bank though. So
Yeah.
there's
And
some variances in terms of how it works.
right. And it's specific to that bank because that bank gets more value out of it, making it specific to that bank. I also truly
Hmm.
believe
Hmm.
that every large ecosystem, be it a bank, be it a soccer team, be it a state, these large companies, be it Amazon, Walmart, they're going to issue their own currencies. They're all going to have white labeled currencies. And that is what STBL is bringing to market. It's bringing to market the technology so all these ecosystems can issue a specific
Mm.
stable coin. Because the two people that benefit in that ecosystem is the creator of the ecosystem, in this instance, Walmart, and the consumer of Walmart. If there's a Walmart coin, there's more value, more loyalty rewards, more revenue to be spread around because they reduce the fees and the time to use the traditional system, and that can be shared by lower prices or different loyalty programs. So the technology is now there to provide these ecosystems with their own currencies, and I believe that's where the future is going as well.
Looking back, what, 13 years ago when you started Tether and really as a way to start putting monetary value that is stable and not volatile like the cryptocurrency, towards where it is today. I mean, we just spent the last 30 minutes talking about everything from, movement of money to potentially soccer clubs, owning, offering maybe some sort of financial services, but at least services that the fans actually would want, right? And obviously we talk about the regulatory side. So we cover a lot. The last question, Reeve, a little bit unrelated, but definitely related to you personally. You are a serial entrepreneur. You have started many projects, many exits, and you're still doing it today. I could see the excitement when you talk about these things because you're charting new paths. If there's a young startup founder watching this show right now, right? They're listening to the episode, listening to your journey and your evolution and your vision. What is the one advice you would give them? Don't do it. Do it with full-hearted ways, or think twice about getting into it. Like, what is your advice?
Passion and conviction, right? You really have to have this optimistic outlook, so you really know that your effort's going towards something. You have to believe, and especially for young entrepreneurs or people just coming out of college, learn on someone else's dime. Get a job at a startup. Get a
Right.
job in the industry that
Right.
you want, and really learn and take some time to really understand what it is that you want to do while you're working for another company, and either help that company flourish, or when you learn enough and you have a unique idea on your own, then go out on your own. But today with the advent of AI and how quickly that's taking off, really just focus on those tools and how to apply them better than anyone else. That's the best thing I can say right now.
Your advice is don't jump into it blindly. Just because you think you have a good idea, you really have to really learn the ropes around what running a company even means. So potentially working with other startups and other new projects in the area that you want to will get you started, prepare you so you can do your own projects that when the timing is right.
Absolutely. Yeah.
Awesome. Reeve, thank you so much. First of all, I learned so much about this conversation, about the origination of, why you created Tether and the stable coin in the first place. I mean, you created the whole industry, right? That we now take it for granted. So first of all, thank you for that. But more importantly, I think you show that this industry doesn't stop. There are so many additional capabilities, both in terms of the technology and also in terms of regulations and policy that you mentioned, need to continue to evolve along with it. So thank you so much for sharing your insights. I look forward to seeing you again soon.
Absolutely. Thank you for having me. It was a real pleasure.